Is that it? All right. Morning, everyone. Sorry about the late start. Let's kick it. All right. First big session out of the U.S. market yesterday. Obviously, we're already trading solidly in the beginning of the session, and then obviously that we had the news of potential Greek deal. Was already kind of swirling about. Then we got a little bit more confirmation of that, and things really started to pick up steam from there. And you can see what happened. We finished up over 1% in all the major indexes. And I think, catching the market a little bit on the wrong foot. I think a lot of people were short coming into the session, and people looking for lower levels. We'd traded down consecutive sessions, kind of globally, most of the markets have been under pressure for several days in a row. And I think that, like we said, I think the momentum guys are trying to start to get short and probably got caught on the wrong side of it. We have crude oil inventories again falling for fifth consecutive week. We've seen a real drift up in the oil price over the last few sessions. Another big thing that happened yesterday was Netflix that exploded again. They're going to do a stock split, but also one of the major hotel chains is looking to give access to Netflix in the hotel. So a couple bullish things for Netflix. And the big thing, I think one of the biggest things that's going on right now in the market is the bond market. So, which has kind of had a bit of a hush-hush. People have been talking about it, but, hasn't been the focus of the market the last few days as it was maybe a couple of weeks ago. So let's get into the Asian session. If we look at in Asia, everything was solid except for Shanghai, which is it's really been down since the open this morning. We had the Nikkei, which surprisingly has pushed higher. With this move in the yen. I know I caught some of that move yesterday, but I didn't think all of it. I'm surprised to see the Nikkei trading as well as it is. Australia really solid. I think they had positive jobs numbers. I think they added, if I'm not mistaken, 42,000 jobs. Which is better than expectations, and we saw the Aussie dollar rising a little bit, and obviously the Aussie market getting a nice bounce from I think what were multi-month lows as recent as a couple sessions ago. There's some real fears there that they're going to start to follow China down the black hole, and so the Aussie dollar, the Aussie index, pretty much everything has been under pressure over the past few weeks on the back of that. All right. Chart of interest today. This is really interesting to me is that the Fed has come out, not the Fed, over the past, I think it's 6 months, the S&P has been getting sold off and pretty heavily in heavy volume in the last half an hour. And that's going on since the beginning of the year. So if you take us year to date, I think we're up just over 1%. Okay, but if you put in the final 30 minutes of the day, if you just look at what we've done over the last 30 minutes of the day, we're down like a few percent over the last 30 minutes of every trading session, and it's been doing that on about double average volume. A lot of guys saying that a lot of the end of day volume spikes that come in, and that somebody that is looking to either get out or get short is using that end of the day volume spike to really get out of positioning or get short. All right, no corporate action to report today. In terms of market data, we had the Chinese industrial production numbers this morning out slightly better than expectations and prior numbers. We've got local manufacturing production here at 1 o'clock. We've got retail sales in the States today at 2:30. I actually think that that's quite a big number. So just, have that on your radar. To me, if retail sales today are a beat, if retail sales are a beat, then it's to me it's a nail in the coffin that we see. I already think that interest rates have to rise this year. The bond market is absolutely screaming at us right now. I think the stock market hasn't fully reacted to the bond market yet, but retail sales today is actually bigger than initial jobless claims, if you ask me. Watch that one really closely. If we get a beat here and we're at 1.4, 1.5, especially anything higher than that, I think the market actually sells off hard because I think bonds get annihilated and yields go through the roof. All right, moving on, let's get into the maps. Okay, the first thing we're going to have a look at is the bond market. So yesterday, famed investor Bill Gross was out with his first technical tweet ever, if I'm not mistaken, talking about inverse head and shoulders popping up in the bond market here. Sorry, unfortunately, all I can really do is give you a 10-year chart here, but he's looking at stuff like this. So you can see obviously left shoulder, inverse head and shoulders popping up. Is what he was mentioning, and he's talking about across kind of global bond markets. So you have a little inverse head and shoulders set up here, breaking out properly on the 10-year. It looks, there are a lot of the same sort of setups across many of the bond markets that are around. So this is obviously, indicative of what's going on everywhere else. And I think, one of the things that is one of the most, I would say, highly correlated events in stock market history is typically when bond yields start to rise. Very shortly after you start to get a correction in the stock market because of the inverse relationship and the different investment characteristics, etc. So this is really, really important and really, really pertinent if you don't, understand bond markets, and you don't understand, the rotation of asset allocation. This is very, very, very important. And I think that, like I said, I don't think that the stock market has really reacted to this yet. At what point will it? I don't know. But this is to me still the most important thing in the market as we sit. All right, next one we'll look at here is FirstRand. So we're going to look at FirstRand here on the daily. The reason why I wanted to look at it, let's back it out to a 2-year. But the reason why I wanted to look at it was because we have held perfectly on trend support. You can see there at the bottom of these green candles where we've actually pivoted and turned. Looking very similar to that. We turned and we turned hard. 51 was really where I think support was anyway, horizontally, and it was close to where the target was for our head and shoulder breakdown. So I actually think we possibly could have seen the bottom here in FirstRand, especially if the markets start to hold up from here. So watch this one really closely. I mean, if we get another look at 51, I think you got to have a stab at it there, just because of the way that it's kind of acted off that. I think we could run into a little bit of resistance up here around 54. Let's zoom it forward and just see more exactly where that level is. Here at the neckline of the head and shoulders, we're looking at about 53.60, 53.70. I think we're going to get up to, I would expect us to get up there today and test then the breakdown point from the neckline of the head and shoulders. If we get above it, obviously, what was support, what was resistance now becomes support. All right, moving on. Let's look at Billiton. So Billiton, Billiton. Look at the London chart here. Okay, so we've been talking about, we've had such big currency fluctuations here that it's been a lot cleaner typically to look at these at the UK charts, and Billy's is a perfect example. So right here at 13 pounds, we made a big reversal yesterday, again bottoming out at more or less the same price. Very big level here setting up, and we've really moved into some sort of a channel that we've been into for quite a long period of time. If you look at that, between 13 and 15 more or less for most of the last 6 to 8 months. Watch this. I think we probably could see a little bit of follow through here. I know that they got an upgrade 2 days ago from SocGen. We've actually seen physical commodities for whatever reason starting to run over the last few sessions. If that persists, and I think this thing may be going a little bit higher. All right, next one we'll look at is Sasol, and we're going to look at a 30-minute chart here. So we kind of got, I wouldn't call it, I mean, it's ugly if you want to call it inverse head and shoulders, but it's a nice formation. It's a very clear resistance level, and I think we need to get through 37. 437 is the level I would throw out there. 440 for real confirmation on the, to the upside, and we'd be looking for a target of about $20 on that move. So we're just watching it closely. Somewhere here between 437 and 440. If we get above that in Sasol, that we could really start to move to the upside, maybe get up close to 460 on the back of that. I'm going to leave it at that, guys. Good luck out there today. Be careful going into closeout. We can have some very, very big moves in the index.